And if you roll the clock back to August 10th of 2020, when we embarked on this journey, Bitcoin's performed 10x better than anything else. Gold's down 10%, NASDAQ is flat, Bitcoin is up 86% since that time.
Hey guys, welcome back to the channel. Today we have Michael Saylor showing us some of his Bitcoin price predictions and how he thinks now is the ideal moment for investors to buy Bitcoin amidst the price dip. According to the Microstrategy CEO, the secret to making millions is making better investments, and now is the right time to do so better than ever. Following a weekend in which the cryptocurrency market lost more than $200 billion and the U.S. cryptocurrency lender Celsius Network halted all withdrawals, Bitcoin prices plummeted by nearly 9% in the previous 24 hours to $20,390.40 or INR 1,589,358.40. Bitcoin's price has declined by more than half from its high in November 2021, resulting in the collapse of the entire cryptocurrency sector. As Bitcoin BTC fell below 33,000 for the first time in over a year, and Ethereum ETH and Cardano ADA also fell, the crypto market seemed to be imploding, or at the very least facing a severe correction. Given the classic financial cliché, buy the dip, investors may be hunting for a piece of the volatile cryptocurrency market in the hopes that this is a transient slump rather than a long-term bear market. If you believe that now is the moment to buy, be ready to listen to Michael Saylor's price prediction. According to Michael Saylor, Bitcoin's price is expected to hit 6 million, but it will first reach 600,000 per BTC. Taking a look at the charts, Michael Saylor claims Bitcoin has performed better than other assets, and there is a lot of potential for Bitcoin right now, either long or short. Don't forget to comment down below what you think. Hit the like and subscribe button if you enjoy the content we do here on this channel. Let's get right through Michael Saylor's Bitcoin price predictions.
Bitcoin, if your time horizon is 1 month, it looks like a volatile risk asset. But if your time horizon is 10 years, it looks like a risk-off store of value asset. So the crossover point is 4 years. Nobody's ever lost money investing in Bitcoin for 4 years. And if you want a surrogate for the book value of the Bitcoin network, it would be the 4-year simple moving average. The simple moving average of Bitcoin over 4 years is about $21,685. Bitcoin's only touched that point a couple of times in its history, and those have always been great buying opportunities.
Michael Saylor emphasized that Bitcoin would go on to be the best performing asset in long term, be it 2, 5, or 10 years. According to him, the crossover point for holding Bitcoin in profits is 4 years. A simple moving average is an indicator that calculates the average price of a certain asset over a specified time period in order to establish a trend that is frequently obscured by excessive volatility. To smooth the unpredictable, short-term variations of an asset's price movement, the moving average calculates the average of a given range of values and divides it by the period. Saylor's 4-year simple moving average is just the average price measured over a 4-year period. Tightening financial conditions are causing tremendous market volatility, which is wreaking havoc on the cryptocurrency ecosystem as a whole. Bitcoin, the main digital currency, has begun a new trading week by plunging below another psychological milestone, below 25,000, and to an 18th-month low. Bitcoin was last trading at 24,136 per token, down more than 8% on the day. Ethereum is leading the main tokens, down 13% on the day, and last trading at 1,078 per token. The panic selling gained traction after the Celsius Network stated that all transactions on its platform would be halted. Despite falling to its lowest point in 18 months, the CEO of Microstrategy claims that Bitcoin has outperformed other investments. However, like with any investment, especially in the volatile universe of cryptocurrencies, previous success is no guarantee of future outcomes. According to Michael Saylor, gold is down 10% since August 2020, the NASDAQ is flat, and Bitcoin has gained 86% during that period.
Bitcoin's backed by the most powerful secure computer network in the world. If I gave you $100 billion, you can't reproduce it. And it's beyond a nation state attack or corporate attack. So once you understand that and the fact that it's a singularity, there's nothing like it in the world, then yeah, this is an ideal entry point to get into this thing. We've only got a $200 million loan that we have to collateralize, and we're 10x over collateralized on that right now. If the market traded down by a factor of 10, we've got cash and we generate cash flow. So this has all been, the margin call thing is much ado about nothing. It's just made me Twitter famous, so I appreciate that. And the Twitter trolls love to beat up on me because it gets them engagement. As for
Bitcoin has barely briefly surpassed 45,000 in the last 6 months and has not been above 50,000 since December 25, 2021. Despite the ups and downs, Bitcoin's current price is still a long way from the all-time high it reached in November when it surpassed 68,000. Despite the current price drop, Gareth Salloway still believes that Bitcoin is still more than twice as valuable as it was only a few years ago. However, these types of ups and downs are nothing new for Bitcoin.
As for the company's balance sheet strategy in general, we borrowed $2.2 billion at a blended interest rate of 1.8% before interest rates doubled. Junk bond indexes from 426 basis points to 820 basis points. Mortgage rates have doubled. If you had a chance to grab $2 billion at 1.5% interest, it seems like a reasonable thing to do, and I'm glad we did it. Most of it is unsecured debt. 1.7 billion of it is unsecured. The 500 million comes due in 7 years after we borrowed the money. So we feel like we have a fortress balance sheet, we're comfortable, and the margin loan is well managed.
The buy the dip idea is predicated on the idea that price dips are transient anomalies that will right themselves over time. Dip investors expect to profit from price drops by purchasing at a discount and reaping the benefits when prices rise again. Because cryptocurrency markets are volatile, buying cryptocurrencies at any price, let alone a dip that may turn into a long-term trend, is risky. Prices may rebound to former levels, but they may potentially fall further, leaving your investment underwater. If history is any guide, the current dip might recover similarly to last year, when prices fell to comparable levels before rebounding to pre-dip levels and even peaking in the fall. They might not, of course. Would buy the dip strategy really save investors in Bitcoin itself? Comment down below and don't forget to like and subscribe. We'll see you in the next video.